You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. If you trade options, you want to be smart about every decision. So why not choose the smartest platform for your trades? At Public.com, you can view upcoming earnings dates directly in the options chain. You can queue and execute multiple orders simultaneously. Easily view contract performance over time. And if you have a question about any stock, you can ask Alpha, their AI for investors. But want to know the smartest part of trading options on Public? Earning rebates on every single contract traded. No other platform provides options trading rebates, and they reduce your trading costs to less than $0 per trade. So, make the smart move and switch to Public.com, the only options trading platform where you can earn rebates on every single contract traded. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. And now, get ready to hit the Option Block.
All right, everybody, that music means we are back. Yes, we're back live in the Chi-Town studio. Did you miss us? We were off last week for the July 4th holiday. Hope all of you took a nice respite, a hiatus from your trading screens as well. I went out, fired up the Western studio, toured a little bit of the Los Angeles area. It was pretty fun. Got to say, I'm a little tired coming back from it. We went hard into some of the parks out there, walking, 15 plus miles a day, some days. End of the day, I was like, why am I so tired? Oh, wait, we just walked the distance from the studio in downtown Chicago, let's say out to O'Hare Airport. That's a long way. So it wasn't a restful, but it was a fun time out there. Fun vacation for the holiday. Hope you had a good July 4th. Whatever you ended up doing, one thing you weren't missing out on was content. We weren't live in the studio last week, but you folks got a ton of stuff. Of course, OBC hitting on Wednesday and an explosion of content from the OIC conference. Kept you fed in between our live appearances here. But again, hope you had a good weekend and hope you're ready and rearing to go with a little bit of OB fun. Of course, if you want more in your lives, you know where to go. TheOptionsInsider.com/pro is the place to go to learn more. As we learn who's joining us on the show today, I'm pleased to kick off our broadcast week with the rockingest of lobsters, Mr. Andrew Giovinazzi from OptionPit.com, as well as by the uncleest of Mikes, Mr. Uncle Mike Tosaw from St. Charles Wealth Management. Both of them now need to put their hands on their proverbial buzzers because it is time for a little bit of 80s trivia. Here we go. All right, everybody, let's get to it. Gentlemen, get your hands on your buzzers. I see movement already. So someone going to buzz already before I ask. I dare you. I dare someone to buzz. All right, no one's that crazy. All right. I was thinking, I was roaming the hinterlands of LA last week, and I was like, what's a fun LA, Los Angeles themed 80s bit of trivia? And I was hard pressed to think of it. I finally came around to, there was a popular television show in the 80s that had Los Angeles right there in the name. Wow, Uncle Mike already buzzing in. I will say this. I wasn't really watching this show. I was a kid in the 80s. So I was watching, your He-Mans and your A-Teams. But for a select few, I know this show was popular. Mr. Uncle Mike, you buzzed in first, sir. What are you feeling?
LA Law.
Yes. Well done. Look at, I see.
Wow.
Rock Lobster. I thought
totally
you said last week
that show.
You said last week you wanted no charity. I thought this one might actually lean towards you. You are a wee bit older than Uncle Mike and myself, so I thought maybe you were watching a little bit of LA Law while we were watching the aforementioned He-Mans and the A-Teams and stuff. I thought maybe you were down for a little bit of this, a little bit of late night legal soap opera, but apparently not. Uncle Mike beating you to the punch on LA Law even. My goodness. All right.
I remember the show.
All right. Do you remember the show? All right. Half a point, bonus opportunity right now. Name one person who was on the show.
Oh, Harry Hamlin.
Yeah, there you go. All right, half a point, so you redeem a little bit of yourself. But Uncle Mike still taken for LA Law.
I'm just at the point now. I'm just a charity case.
You said you wanted no charity, but half point for which Harry Hamlin is the best one to name, of course. Clash of the Titans. I would have also accepted Jimmy Smits. He also was in Star Wars and many other things over the years.
Jimmy Smits was a good one. That guy Corbin Burnson was a good one.
Yeah, I just looked it up. I forgot he was on that show too. Yeah, he was.
Yeah. Now he's on Psych, I guess.
Oh, is that show still? I didn't even realize. I remember Corbin Burnson, of course, from Major League. That's where my 80s Corbin Burnson love comes from. But all right, we digress. Were you watching 80s lawyer soap operas? If so, maybe LA Law. Well, not one of my favorites, but maybe it's one of your favorites as we keep on rolling into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, listeners, welcome to the trading block, the portion of the show. We break down what the heck was trading. Obviously, no show on Thursday because markets were closed. Kind of a weird trading week out there. But we're back at it again this week, and the markets are having a hard time once again trying to figure out what they want to grow up to be today. We have the S&P pretty much almost exactly unched right now, so hanging out in unched territory. Slightly red at 0.01 if you count that as unched. NASDAQ up about 0.15, almost 0.2%, and then the Dow off about 0.2%. So we got a bit of a mixed bag, and just because it's fun, because they're out there doing their own thing all the time, let's look at our old friend small caps. And once again, they are doing their own thing, up about 0.2% today. So small caps, always fun to see what's going on. All that a long way around to saying not a lot going on the tape since the last time we fired up the mics a week ago, listeners. Again, that's why we were off all the last week. VIX at a 12.5 when we kicked off the show, literally unchanged on the week. And VVIX at a 78, also literally unchanged from our Monday episode a week ago that I did from the Western studio. So not a lot to unpack, which gives us plenty of time to dive into all the fun nuances that was LA Law. Mr. Uncle Mike, extending your commanding lead yet again once again this week. I'm impressed. You pulled up. I tried to say LA at least once to drop you guys a hint. I didn't just say Los Angeles, so hopefully that helped you out. But I was surprised pretty quick on the trigger finger for LA Law. Uncle Mike, is there no end to the depth of your 80s trivia knowledge, sir?
Well, so, I used to watch Victor Cifuentes. I really didn't watch that show all that much, but it was a little bit ahead of my time. I think I was in grade school when it came out, but it's kind of a cool theme song from what I remember of it. I remember liking that as a kid, and then
yeah, the 80s all had cool. Every show had a great theme song. They don't really do that anymore. It's a lost art.
I wish they did.
The art of Mike Post.
That's because TV stinks right now.
Well, that's true too.
Like 80s TV was pretty good. 90s TV was pretty good. 70s TV was great. I don't even know what you would watch on TV right now.
Like the last show to really devote any time to a theme song was maybe The Sopranos. Maybe you could say Game of Thrones, I guess, a little bit too. But outside of those, not many shows really spend the time to even have a theme. There's that's 20 seconds we could use on plot. So they go there instead, I guess. I don't know. But I digress. Mr. Uncle Mike, have at it, sir.
Well, in terms of markets today, we're not getting a ton of movement, just showing the S&P as of right now relatively flat on the day. And just not a lot happening in the stock world at this point. We are getting a sell-off in the precious metals with gold and silver down a little over 1%. Not a huge move in the precious metal land, but still something to take a look at. Not a lot of movement in the bond space either. That's relatively flat on the day. In terms of some individual sectors, not a lot of movement there. I would say that technology is up 0.5%, looking at XLK. But on there, though, I would credit most of that move on that 0.5%. Not most of that move per se, but just to a few names. We have Tesla up just under 1%. NVIDIA is up just under 2%. So a few things are doing a little bit, but a lot of things aren't doing much. In terms of some individual names that we're following, that's lighting up our tape and our triple income portfolio for covered calls. Qualcomm is up on the day today. We actually have a lot of stocks that are up on the day, but not that much. So kind of what you want for in the covered call world. So I really don't have a lot to comment on this market today. I guess just a lot of people are still recovering from the Rock Lobster's big barbecue over the weekend. From what I heard, it's the
That I did.
Mr. Rock Lobster, if you have any thoughts on LA Law, if you want to give us any final thoughts on your epic 40-person barbecue, I think you said you had over the weekend, or anything else catching your eye on this very slow start to the week, Hevet.
Yeah, I had a personal grilling amount of stuff record, but it was I've learned to be able to grill and put stuff in a warming drawer, and I don't know. So there was a lot of technique, but LA Law, I thought that was a kind of a good show. I was trying to remember I can remember some of the dudes, but I can't remember any of the women that were on the show. None of them are coming to mind.
I think Susan Day was one of them.
Was she really?
Yeah, Susan Day is the only name that comes to mind for me. Unless you're a big, I'm looking at it right now. Unless you're a big Susan Rattan fan. She was apparently.
Oh yeah, I remember her.
Rattan. Yes, there you go. So I think that was Arnie Becker's secretary.
I think you're right.
If I recall. Yeah, I mean, this is going back a solid 35 years. At least. As far as the market goes, we got some earnings on Friday. So the first bank earnings are coming in. Remember last year in the spring, everybody was freaked out by it. So we have that. I think there's a little bit of tension in the term structure and volatility right now. So I think VIX is probably a little higher relative to the futures than it would be if everybody was as happy as what's going on. I think because you've had like VIX up and SPX up for the last couple of days, although right now VIX is now down 8 cents on a Monday, right? So normally with the weekend effect, it would be the other way. So they weren't really discounting any vol into the weekend. I think there might have been some back and forth on whether Biden is going to stay in the race, but apparently wrote a letter to Congress saying, hey, I'm in it to win it. And so that, in my mind, would kind of seal up, okay, like we got these two guys running until, November, and unless something changes. So that might have taken some of the heat out. Vol futures are definitely lower today. So UVXY, I believe, making an all-time low. UVIX, the stock that we love to make fun of, is $4.80, down from $12 mid-April. So, I mean, you have those things happening, and I think we're setting up like where these tech earnings have to be pretty great because we're talking some like solid multiples here on artificial intelligence. So I have a couple of just like little year treasures. So 1 year ago, Microsoft was 326. Right now, it's 465. 30% gain in 1 year. Okay, for Microsoft. NVIDIA. Again, I'm not saying that these companies can't go up or whatever. I'm not being like a Debbie Downer, but NVIDIA is up 3 times from where it was last year, 3x. That's pretty big. And you could go through the list. I think Google's up another solid. Yeah, Google's up $80, $70. So that was 70% move. And then Facebook, of course, remember the metaverse? Everybody thought Facebook was dead. And now Zuck is just laughing at everybody. It's 295. It's basically doubled, or let's say up 70%. So a lot of the gain in the S&P 500 is in those stocks. And it's substantial. And you're seeing the second thing is, and we were just remarking it today in Option Pit, our morning meeting. It's like, you're going to McDonald's and feeding 4 people, it's $75. That can't possibly help McDonald's. Like Nike, Nike. So I'm like Starbucks. You're seeing kind of these sort of upper end consumer names not doing that great. Starbucks was $110 in November. It's $75 now. So, do you really want to pay $5 for a coffee now? Do you want to, the whole idea of fast food back in the old days was it was $2 for a Big Mac and fries, or $2.50, whatever. Now it's like $12, $15. Who wants to spend? And then the quality has gone down precipitously, at least in my view. So, I think there's some issues with some of these names, and inflation is kind of hitting them harder. The drugstore stocks are totally smoked. So I don't know. There's those things are, again, AI tech and all that is not those businesses, but there are a bunch of stocks in the market that are getting, drilled. And I think it's just something to be worth keeping an eye on. I mean, McDonald's, we got earnings, and McDonald's are going to come out in, end of July. And you're seeing probably the highest fall we've seen in McDonald's going into earnings in, 6 months, a year. So there's some stuff going on there for sure. And that's like, it's almost like 2 different markets, I think. There's the AI market, and Tesla's back in the game. Also, like Tesla could be licensing their self-driving technology to companies, and there's some pretty decent short interest in Tesla. So, where does that put Tesla? Like $30, $40 pop? So you definitely do interesting, like, market is, there's opportunities here, but I think that a certain consumer segment is getting hurt with inflation right now. As you can see, whatever the news, the politicians say, but the reality is, like, McDonald's wasn't built to function when they're paying people $20 an hour to work there. It's supposed to be like, dumb kid out of high school, or he's in high school and he just needs a job. So, I remember we're making $3.15 an hour. Granted, long time ago, but the economics, I just don't see how the economics are working for fast food right now. But that's just one sector. We'll see how things change. But so I think you have these kind of 2 currents going, and then of course you got bank earnings on Friday. So that is enough, though, to keep the market going nowhere. Something's good, something's bad, everything flat.
Everything flat indeed. Let's keep on rolling. Our chat is debating who else was on LA Law. So we've opened up the floodgates of everyone remembering, oh yeah, that show. And wasn't that person on that show? Which is, again, that's what the 80s trivia segment is all about, listeners. Are the markets all about some volume? You know, it's kind of a sleepy start to the week. So you'd be forgiven for thinking no, and you'd mostly be right. It's kind of an inverse day out there today. We're not seeing the ton of action in the single names, but in the indexes, actually, we're seeing a surprising amount of action, including in our old friend VIX. Like we said, VIX literally unched on the week, so you'd be forgiven for expecting a whole heck of a lot of nothing. Sleepy start to the truncated or post-truncated holiday week out here. And the answer would be no. VIX, a banger already. 733,000 contracts pretty much right out of the gate. So we are on fire out there in VIX land, which usually says to me there's some funky size spreads going up. Let's go see what it is. Listen, it looks like it's the SEP 2545 going up 100,000 times today, listeners. Again, they went up late. They went up as individually marked legs at the same time, but they didn't go up marked as a spread. So it could be the old Tosaw era stupid. But look, it looks like a duck and it quacks like a duck. It's probably a spread. Looks like they picked up the 25s for 59 cents. And then, again, it's mid-market, so anybody's guess. They could have bought these for 21 cents, but they probably sold the 45s for 21 cents. They did that whole spread, listeners, for 38 cents. I don't know. You like that, Mr. Rock Lobster? Is that your read as well? Is it the SEP 2545 going up 100,000 times for 38 cents? And if so, are you a buyer or a seller?
That's a little small spread. I love those little spreads. So I would not be a seller of that spread.
Yeah, it's hard to sell that.
I would think like you got to have at least one shot to sell that higher by then. That's the thing with VIX. It's fun. Oscillates and those call spreads don't go anywhere. And then all of a sudden, you get a little bit of a move.
There are many things about VIX that is fun. That is certainly one of them. You're right. You can't sell that spread for 38 cents unless you're hardcore maybe and you like to bite your fingernails for the next few months out there. But that seems to be what's driving the paper out there in VIX land today. Beyond that, not a ton, but still, again, decent paper out there total in aggregate out there. Unless you're really excited about 30,000 each of the AUG 14.5. Looks like that synthetic going back up again, so about that 60,000. So right there, the top four, you got 260, a little over 250,000 contracts. So that's kind of what's lifting VIX out there right now. Can the same be said for our other friends out there? Let's go find out. Let's go out to SPY land, listeners. And, you know, SPY actually a little bit light compared to where we usually expect. I usually expect SPY to be around 4.3, maybe 4.5 this time of day. Today, we're looking at 3.8 million. Also, by the way, the ADV has come in across the board on all of these major indices, which, again, not surprising. We just came off a truncated, very quiet holiday week. The VIX ADV is down to 712 after threatening 900K not too long ago. SPY, same deal, 6.8 million on the tape ADV right now. So that's coming in shy of 7 million as well. Even though today, like we said, 3.8 million. So not explosive, but it's not exactly, 1.5 million either. Speaking of 1.5 million, let's go out to the S. The S, 1.61 million. So a little bit shy of where we expect it now as well, about 1.75 million out there. The ADV and the S also coming back in below 3 million contracts a day. 2.94 million is the ADV for the S right now. Small caps, like we said, they were kind of bucking the trend. They were popping about 0.2% to start the show. And they're also popping on the volume front, 847,000 contracts on the tape right now. That's against an ADV of 1.2 million. So they seem like they're on pace to hit that today. So banger day out there for the small caps. Let's not forget our friends out there in the Qs. And they're looking kind of sleepy today, but not terrible. They're usually around 2.2 million. They're at 1.96 million right now. The ADV about 3.33 million out there in the Qs. Let's head out to single name territory. Let's see if there's any bangers out there. Short answer is really no. It's not exactly an explosive day. Seems like all the action, such as it is really centered in small caps and the VIX today. So go figure on that front. Number 10 cost you $269. So that's, again, it's July, listeners, coming off of the July 4th weekend. $269, nothing to sneeze at in the single names camp. It's not $369, but it's also not $169. That gets us to our old friend, the Mimi Kids, AMC, 5 1/3 right now, up about a third of a buck, good for 269,000 contracts. And the number 10 spot, number 9, our old friend Nike, they're having a rough go of it of late. I think, what did they say? Wasn't their last announcement the worst day in their stock in 2 decades, something like that? Yeah, on the 27th of June, they really got clipped from about 94 bucks down to 75 pretty much overnight, and they're still hanging out 73, 70 right now, off another $1.75 today. So I guess they tried to bounce it. No bueno out there today, but good for number 9. 270,000 contracts. Number 8, the artist formerly known as Facebook, having a rare red day. 529 1/4, off about 10 2/3, nearly 2%. 294,000 contracts on the tape for number 8. Good old Meta. Number 7, my old stomping grounds, one of many. It's Intel. 33.60, up about $1.60 or about 5% exactly today. Good for number 7. 422,000 contracts. Let's just check. I'm curious. Let's see what the folks are up to out in Intel today. Looks like it's 31,000 of the July expiring on the 12th. So this week, weekly 34 calls and 24,000 of the these are expiring next week, the 19th, 34 calls as well. So a lot of action on 34 calls, all opening. And then 24,000 of the expiring on the 12th, 33 halves, also opening. So it's not a roll. It's just size at the money, near out of the money call action here in Intel today. Interesting. Good for number 7, 422,000 contracts on the tape today in Intel. Number 6, the Amazonians, 198 3/4, off $1.25 or about 2/3%. Good for 460,000 contracts. And the number 6 overall spot. Number 5, this one has kind of been on the rampage of late. Good week for them. This is Palantir, up 220 or 8.5% just in the past week. Popping hard out there. Today up about 41 cents or 1.5%. I was traveling obviously last week, so I haven't been following the headlines on Palantir. I'm guessing they got a new contract, more buyers than sellers at the end of the day. Either way, popping hard this past week. Good for over 500,000 today, 529,000. So Palantir managing to become a regular participant in our top 10 these days. Number 4, keeping it in the A tech names now. Let's go to AMD. 175.90, up about $4, almost exactly, about 2.33% today. Good for 660,000 contracts and the number 4 spot. Number 3, keeping the A tech name love alive. It's Apple. 793 on the tape. 226.40. What a new regime this is for Apple. We were joking about it not too long ago. They just bought the stock, and so it went up. But they finally did. They finally whispered those 2 magic letters of AI. And again, roughly, not quite 20% for them, but pretty good. Actually, it was about 20% because they were on 170, I think, at the time, 180 when they announced that buyback, and we're at about 226 right now, so a little more than that. So decent little run for Apple. 793,000 contracts, up about $0.33, so kind of a quiet day for them today. Number 2, I think this is our new order, listeners. Tesla, number 2, 2.3. Tesla. Also, I go away for a week, and Tesla apparently rights the ship on the rampage, up 25% or 50 handles since the last time we cracked a mic here on this show, listeners. So Tesla apparently solving all of their woes. They also whispered, I guess they finally listened into this show. They also whispered the 2 magic letters of AI. Bam. Exactly 25% pop. I've been saying this for a while. You're good for 20+% if you just whisper those 2 magic letters. Doesn't matter how relevant it is to your core business. Doesn't matter at all. Whisper them, bam, 20+%. Tesla Exhibit A, 25% since we last chatted about it. Good for number 2, 2.3 million. 2.3 used to be enough for the number 1 spot, easy. That's about 1 million more than Tesla normally does on a decent day by this time. It's not enough to dethrone the new king, though, listeners. It's NVIDIA. And NVIDIA also having a fairly quiet day. We've seen them at 5, 6, 7 million by this time of day, which is bonkers in and of itself. 2 2/3 million contracts on the tape, but good enough, obviously, for the number 1 spot. 128.90, up about exactly $3 or nearly 2.5% today out there for NVIDIA. Going to take a lot to topple the king in this post-split regime out here. Can anyone do it? Can Tesla do it? Who knows? But it'll be a fun game to watch. Speaking of games that we're watching, We've got earnings season. It's back, listeners. Did you miss it? I know I did. I like having some nice concrete numbers to sink our teeth into. Kicking off later this week, we got PepsiCo, our friends down the street here, as well as Delta and Conagra on Thursday. And then Friday really kicks off in earnest. We got the financials, Wells Fargo, Citi, JP Morgan, Chase, etc., and so on and so forth. So if you're looking for some hot earnings action, we got you covered out here, listeners. Updated earnings move results, earnings season reports. The season a banger. I'll get to that in a second. It's also the subject of our question of the week. Right now, looking at some of our earnings move reports coming up for this week. What do we got on the docket? Let's go out to Delta Airlines. They're the 11th before the bell. They're at $46 when we ran this report. They're pricing in $2.67. In the past, they move $1.64. So $1.03 worth of extra juice. That is sizable for Delta Airlines. Apparently they are looking for a little bit of action out there. PepsiCo, our friends down the street, 11th before the bell. $164.40 is where they were trading. They were pricing in about $4. In the past, they moved $3.10. So nearly a full dollar's worth of extra juice in PepsiCo as well. Intriguing stuff. JP Morgan on Friday, 204.75 is where they were trading. They're pricing in $5.87. In the past, they moved $6.53. So trimming some off the top. Haven't seen that in a while. Interesting play. Is that going to be the way for all the financials? Let's see. Wells Fargo, same day, 59.2 is where they were trading. They were pricing in $2.15. In the past, they move $1.78. So they're pricing in a little bit more juice on the top. So they're going the way most folks are going these days. Let's go out to Citi as well. Same day, Citi, 64 even when we ran this report. And they were pricing in pretty much $2 even as well. In the past, they've moved $1.02. So they're pricing in about a third of $1 worth of extra juice. So they got the memo that more juice is where the action is. And if you want some hot stuff for this last season to wrap it up, let's go out to everyone's favorite. Let's go to Manchester United, ticker symbol MANU. They are popping off the 10th before the bell. They're trading 16.25 when we ran this report. They're pricing in 55 cents. In the past, they moved 48. Remember, this one had all of that action, was it a year and change ago, when Musk started talking about it, and potentially there was rumors he was going to acquire it, and the stock took off. Haven't seen a lot of action like that since, but there you go. If you want some names that aren't financials that are popping off this week, a little bit of MANU action. But all the action so far has been in buy and vol, listeners. I was saying it last cycle. Our long-term average has skyrocketed now to 109%. That was as of the end of last season. And I said, we were at 118, 119 to end the season last cycle. So that long-term average, you got to figure going to go up. And it is. We have the new reports, listeners. Our long-term average now 113%. That technical term for that is bonkers, listeners. We've been running this data, crunching these numbers for a long time. And I've never seen anything like it. It was back in the depth of the pandemic. It was, high 70s%, low 80s. So that's a huge move up to 113%, which also gets us on track for our question of the week right now, saying it's earnings season once again. Our long-term average for earnings volatility has skyrocketed to a record 113% after last season. Are we on track for yet another explosive season? Will this cycle beat the record? Are we going to come in this cycle above 113% or below it? Get out there, make your voice heard. Just went live right before showtime, listeners, as we keep on rolling.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, listeners, time to go around the block, and I'll just admit it to you at the top here. There's a whole heck of a lot of nothing going on out there today. So we're going to plumb the depths of some of the trades we've talked about recently, including just last week, I believe, on the show. We talked about some action out there in GlaxoSmithKline, now GSK PLC. On the year, it's been an interesting one. It was $33.85 a year ago, and they got up to as high as about $46 back in May. They have since given some of that up. What we saw, though, last week was some upside call paper. Somebody coming in when the stock was $39, pretty much even, and buying 4,000 of the 39 calls expiring last week on the 5th and paying a whopping 60 cents for those bad boys. So GSK's had a decent year. It's up 14% and change on the year, but it just seemed like a bit of an aggressive action out there, to say the least. They also bought some earlier in the morning. We talked about these before. The market was no bid at $2.35. They traded them for 35 cents. So they got 4,000 earlier for 35 cents. They came back, said, how are they now? And then the market makers made a more realistic market. They said 40 cent bid now. Stock had moved about a dime. So not a huge move in the stock. They were 40 cent bid now at 60. And they said, we'll pay 60 for the rest. So they did about 8,000 of these bad boys. And guess what, listeners? The stock closed at $38.84 on expiration. So by math, that is below the magical 39 strike, let alone the 39.60 break even of those pricier calls. These calls were still open. So yeah, no brainer. They dropped about $250,000 or close to it, listeners, on that big block of the 60 cent kind. And then they dropped another $1.40 on the 35 cent kind. Those are all still open. So you're talking about $380,000 thrown away to the options gods as an offering, sacrificial offering, during a very quiet July 4th trading week. Mr. Rock Lobster, we kind of questioned the wisdom of this when we talked about it on the show recently, saying, I'm buying a ton of calls, and GSK, there were no earnings. Earnings are on July 31st, so it seemed like they were just spitting into the wind. And you know what, Mr. Rock Lobster? The wind spat back. What do you think?
Well, I mean, the only reason to buy calls in drug company stocks is if they make Ozempic or some fat weight loss drug. I mean, I think we looked at this last week. I thought it was a shot, something that maybe had a shot, but I think these calls are toast.
They be toast indeed.
Toast.
Not exactly tasty toast either. A very painful lesson, maybe, not to just swing for the fences on a truncated. Well, I don't know what was afoot. There's drug approval, something going on in GSK, but they really had to have it, and they were willing to pay for it. And unfortunately, they literally did pay for it. Went way of the dodo. Let's pay off a few more here. Listen, let's go out to the June 6th, so the D-Day show. So a little over a month ago now. It seems D-Day was only already a month ago. Crazy. Seemed like they were just having all those big celebrations. Let's go out to Avantor Inc., ticker symbol AVTR. Talked about this one before. Biotech listeners trading about $21 today, kind of unched on the day. On the year, this one has kind of been all over the place. $20.68 a year ago. The low was about $17 and change. The high was about $26 and change back in March. And when we talked about it back on the June 6th show, the stock was $24.16. And somebody came in and said, you know what? I want to draw a line in the sand. I'm going to blast away at 20,831. So funky size as well. Of the 23 puts expiring on the 28th. They did them for 21 cents right off the bid pretty much. So a little bit of earnings. Actually, not even earnings. Earnings are on July 26th. They don't even get earnings in these. It's just a straight up line in the sand. And it seems like, Mr. Rock Lobster, that line was crossed. The stock closed at $21.20 on expiration. Now, it's a little bit confusing on the data side exactly what happened to these puts, because they were open. Then they show that they went away like a day or so before. It shows the OI was pretty much negligible on expiration, but I can't find a trade or any appreciable volume that would take away the roughly 20,000+ that was open since this trade went up. So it's a weird one. Worth noting, as of June 28th, the expiration, there were about 20,000 of the July 23 puts open. So they could have rolled to those. Those are all sold on the bid. But I don't have the closing side for the June. So it's weird. It looks like they expired in the money, but I can't find a trade that took them all off. So could just be a weird data glitch, not showing us the print, but it does show that it went off right before expiration. So weird stuff. If I had to guess, I'm guessing maybe they rolled to the July 23s because they lacked the courage of their convictions, sir. They didn't really want to get the stock put to them at $23, so they bought themselves another few weeks. But if they're hanging out here, those July 23s sound like they're going to be put to them as well. Any thoughts on this and what happened to that massive block of June puts, Mr. Rock Lobster?
Yeah, I'm going with your roll because there's the 22s are open 14,000, the 23s are open 15,000. So I think they're stuck a little bit on this one. So I think your roll is probably the right way, and now they're rolling for a while.
If they want to keep that,
it was kind of an aggressive put to sell at the first place, wasn't it? Say when they put that on 6/6. I mean, the stock there, those puts were only a dollar, like a half a dollar to a dollar out of the money at the time. So that's an aggressive put to sell. Like, you're going to own those. You sell what was like a 30 delta put or 35 delta put. That's a little close to the fire for a line in the sand put, in my view. Unless you want it.
Not the Rock Lobster's methodology. I guess they didn't want it because it looks like they rolled. So we shall keep an eye on these. Maybe we'll come back to them in a month and see how they're faring. But it looks like right now they're going to have the stock put to them again. Let's pay off one more from that D-Day show, listeners. Let's go out to INTT Corporation, ticker symbol INTT, a global supplier of innovative test and process technology solutions. Doesn't sound like it's not like medical testing like you might think. This is for manufacturing and automotive and aerospace testing, it sounds like, as well. So, and also something with semi. So they're all over the place, semiconductors. So they make a lot of stuff. INTT out here. At the time, let's see. INTT, by the way, INTT on the year, it's had a pretty garbage year. They were off 12 2/3 or about 55% on the year. They were trading 23 1/4 a year ago. It's been mostly straight down, pretty much, with the exception of the last, looks like, few weeks. So they managed to rally it from about $9.50 up to where it is right now, $10.63. So that's the lone bright spot. On the month, it's up nearly 10%, or nearly a full buck. On the year, though, pretty much in the toilet, off about 55%. Looks like somebody back on the D-Day show, Mr. Rock Lobster, was feeling the turnaround. So let's see. Maybe they made some moolah. Let's find out. They came in, they scooped 1,099 of the June 10s. They paid 25 cents when the stock was 9 3/4. So, all things considered, this wasn't the craziest, the most outlandish trade we've ever seen. It's only a quarter. It wasn't extremely expensive. It was pretty close to the money as well, about $0.25 away. They had, let's see, no earnings. Earnings are on August 2nd, so they don't get any earnings. That's probably why they were a little bit cheaper. And Mr. Rock Lobster, let's see, how close did they get? They got close. Actually, no, these were June, so this was outside of the lifespan of these options because the stock popped in July, got up to $10.81. But that ain't going to do it for them because they had the June options and the stock closed on June expiration, listeners, $9.56. So maybe there's a reason why these calls were so cheap because they didn't get there. These calls were still open. Paper dropping about 27 grand on this trade. It didn't seem that outlandish at the time, Mr. Rock Lobster, kind of rolling the dice, but it was a cheap little date here. And looks like they just missed it by about a week and change. A week later, these calls were 75, 80 cents in the money. So that just shows you a little bit of duration sometimes can be your friend, Mr. Rock Lobster.
Well, usually having more time to work things out helps. But if these calls were still open and the stock was at 9.56 and it's the 10 strike call, that's still no bueno.
That is no bueno indeed. Let's see if Uncle Mike is bueno or no bueno. Maybe he wants to just hold court on his favorite episodes of LA Law. I guess we'll find out. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, it's Monday. Time for Uncle Mike to hold court. I've saved you a whole bunch of time at the end of the show, Uncle Mike, because I know you're very excited to run through the filmography of your beloved Susan Day. Have at it, sir. The floor is yours.
I'm trying to think of just some of my memories of LA law. I remember the Benny. I always liked him. He was always a nice guy. He always seemed to be a lot nicer than a lot of the lawyers on the show. I mean, Corbin Burnson, he was a womanizer on the show from what I remember. But I think they were all very promiscuous from what I remember of it. Corbin Burnson just seemed to have a worse reputation about it. But
it was a bit of a soap opera after all. It's kind of par for the course, I think.
Yeah, so I guess that's why, it's funny. I've never once heard, I've heard us say at times, you know what, society, we need more doctors, we need more nurses, we need more firemen, we need more police officers, we need more this and that. But I've never heard anybody say society just needs more lawyers. Have either of you guys ever heard that before? No,
I subscribe to the Star Trek theory. In the future, the first thing they did was kill all the lawyers, and it became a utopia.
Yeah, that would do it. That's for sure. But anyway, what I want to talk about today is that let's say that you are coming near to retirement. Expand a little bit from the strategy block from last week. You're coming near to retirement and you have a bunch of stocks. And so when you have a bunch of stocks, one thing that a lot of people overlook, they're like, oh, I'm retired now. I need to put all my money in fixed income or in CDs or whatever. I don't want to take on any risk anymore. That might not be the best way to go. And the reason I say that is that let's say that you retire when you're 60. Well, hopefully you're going to live another 20 or 30 years. Not necessarily. You might die when you're 70, 80. You never know. But you want to be prepared in case you do live that long. Because let's say that you do put everything into some type of fixed income or a CD or a savings account or whatever the case may be, and we continue to have inflation. Well, inflation's going to outperform what you're putting your money into. And that's why I think it's important to still have some stock market exposure once you are retired. Now, how much stock market exposure should you have? Well, there's the old adage, you should have your age in bonds. So in other words, let's say that you're 60 years old, then you should have 60% of your portfolio in bonds, 40 in stocks. If you're 70 years old, you should have 70% of your portfolio in bonds and 30 in stocks. That's kind of an old adage that a lot of people go by. What I want to talk about is maybe you could have a little bit more exposure away from your CDs, and maybe you could have a little bit more in stocks. Now, if you're planning on using the money that you need to take a distribution on over the course of the next month, 2 months, even a year, I think it should be in a CD or in a savings account or something along those lines, whatever's convenient for you and whatever works best for you. But if you're not going to use the actual money itself for years and years and years, or even 2 or 3 years, one thing that you may want to consider is hedged equity. And so there's a variety of ways with which to hedge your portfolio. One thing that you could do is you could use a collar, perhaps sell a covered call to finance the value of the put option you're going to buy, or you can just buy a put option. I had a client the other day. He is 72, 71 or 72. I forget what age he is, but one of those two. And he has exposure to Apple. And with Apple going the way with which it is, he doesn't need the money per se. He doesn't necessarily need it based on his net worth, but he still has a decent amount of exposure to Apple. And so what we're doing with him right now is that with Apple running up like it has, I was planning on selling it a while ago, but it just gapped for him, not all of it, but a portion of it a while ago, but it just gapped right through where I was planning on selling it. So what we're doing right now is I'm literally buying for this one specific client, this one situation, I'm literally buying 1 month puts on Apple. And so I'm talking with him about, I'm like, you know what, Mr. Client, I don't really call him Mr. Client, but I said, you know what, Mr. Client, yes, this put option is going to cost you $2. This put option is going to cost you $3. But guess what? If Apple's going up $8, $9 a day, cry me a river. And so what we're doing is we are purposely overexposed to Apple because of the fact that it's just running up so much the way with which it is. And I think it's important to really utilize options in that way when you don't want to necessarily make a decision, because if you run into something like Apple in a portfolio and it's running like it is, you don't want to sell it. But on the flip side, you don't want to be the guy that didn't sell it when it was at 228 or whatever it was, and then goes back to 160. And so that's where hedged equity can really help you out. And this can apply to any stock, quite frankly, or almost any optionable stock, to where if you're concerned that you don't want to lose your upside because you're not planning on dying in the next year or two, and you're planning on living a good amount of years, but you're concerned that the market's going to crash, let's say, or you don't want to be that guy that didn't sell when the S&P gave you the greatest opportunity in the history of the entire stock market to sell. Hedging your portfolio, or hedging your equity section of your portfolio, or a portion of your equity section of your portfolio, can be an amazing tool for people who are at the retirement stage of their lives. I'll be doing a webinar on this tomorrow night. For more information, follow me on Twitter.
Give the man a follow as we keep going around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show we tell you what we're keeping an eye on. Till our next show, where we're joined back again by the Flow Master after a 2-week hiatus from him. Should be fun stuff. Speaking of fun stuff, our question of the week live right now. He said it went live right before showtime. Are you buying or selling that we're going to eclipse that 113% record long-term average in earnings vol this cycle? And right now, fully 100% of you are saying we're going to beat it. Intriguing stuff. Get over there at Options and make your voice heard. As we hear what everyone else is keeping an eye on, let's start with the rockingest of Lobster. Mr. Rock Lobster, sir, anything on your docket until we chat again on Thursday?
Well, in between, I don't think we really have any huge market-moving news. I think we had some FOMC minutes last week, and stocks pretty much gone straight up since then. So it's all the same, not doing anything with rates, and we're waiting for earnings to come out. So this is kind of a little quiet week, I think, while the big, the banks start to report. So that's, so I expect a flattish market for the week, unless we have any surprises. So that's, but I think a huge, if we have some crappy bank earnings, because the market feels like it's sort of poised for perfection here, being at all-time highs, you got to start delivering some earnings. So that's what I will be watching for when they come out.
He will be watching the bank earnings. Mr. Uncle Mike, sir, what are you keeping an eye on until our Thursday show?
I want to see silver. I want to see silver go above 30. It's been teasing me for so long. I want to see it. I'll be watching that and seeing if perhaps we can get another new all-time high in the stock market.
Unfortunately, that music means you won't be seeing or hearing anything else on this show. And if you're seeing this show, let me know how that's happening, because we got to shut down your cameras here in the studio. But don't worry, if you want more in your lives, I'll be back in a little bit with our good buddy, Mr. Bill, to break down all the action. I go away for a week or so, and, it seems like you folks broke the crypto market in my absence, so we'll get into all that fun in a little bit on the crypto rundown. If you're hanging out in the live, just hanging out. We'll be back in a little bit. If you're listening after the fact, just hit next on your podcast device of choice. Mr. Rock Lobster, we'll start with you, sir. If folks want more OP goodness, where should they go? What should they do?
Come on to OptionPit, our OP University. Probably, I'm going to say, not even probably, best option content out there on the internet for learning how to trade options. All the stuff we do every day, all the tricks behind trading options that we know. Come on and check it out. OptionPit.com, 888-TRADE-01, and get your learning on.
Get your learning on at the ivy-covered halls of OPU. And Mr. Uncle Mike, sir, if they want to get their learning on in some webinars, where should they go? What should they do?
Well, follow me on Twitter at Mike Tosaw, Tosaw, or on LinkedIn. Just type in my name. Having a webinar tomorrow night on just what we talked about on the strategy block. Would love to have you guys.
Give him a follow at Mike Tosaw, all one word, Tosaw, on the old X. And, of course, head on over to public.com. See what those folks have cooking over there, including that rebate. I know a lot of you are intrigued by that. I've been hearing your feedback. Send it to them. They're very intrigued by it as well. Public.com, the place to go to kick the tires and light the fires. Tell them we sent you. Goes a long way towards supporting the network listeners. That is going to do it for us on this show today. Back again in a little bit for the old crypto rundown. Back again with our usual array of content, including a little bit of OBC action on Wednesday. Then we're back again with the Flow Master in tow for another episode of the Option Block on Thursday. Stay safe out there, everybody.
Most options trading platforms are commission-free, and there are some that don't charge per-contract fees. Public.com goes a step further. When you trade options on Public, there are no commissions, no per-contract fees, and you get a rebate of up to 18 cents per contract traded. That means it costs less than $0 per transaction. In other words, instead of paying to place options trades, you literally earn money, and that money can add up fast. If you trade 1,000 option contracts on Public, you'll earn up to $180 in rebates. 10,000 contracts? Up to almost $1,200. It's pretty obvious why NerdWallet recently gave options trading on Public 5 out of 5 stars. Because Public really stands out for the cost of its options trades. Their words, not ours. If you want to start paying less than $0 to trade options, check out Public.com and get a rebate of up to 18 cents per contract traded. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. U.S. members only. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.